Welcome to thestockminer.com. I'm Brian Johnson. Let's get into it. Okay, so the markets were down today, and if you live in or around South Dakota, we have a word for that up here. It's called yeehaw. Boy, was that not a fun ride today? Wow. All right, so what did they say? Grease debacle? I think I mentioned something about grease debacle in earlier videos. Now, they got to have something to pin it on, but come on, guys. If you've been following along, you know it's not just about grease. It's about all kinds of stuff. So they'll say it was all on grease or whatever the case is, and I said they probably would blame it on grease. Fact of the matter is, things are not good. I think today was a pretty telling sign of that. It might take a little bit of work now for them to bring this back up, but wow. I'm seeing low ticks of, look at this, 98.70 in the Dow. A 1068-ish, which by the way was one of my support levels in the S&P. If these ticks are right, if they're not bad ticks, and this is actually where it went, holy smokes. Was it PPT? Was it investors and bankers jumping back in? Maybe it was all of it. Who knows? Really hard to tell. But a huge rundown, only to be followed by a big move back, right back up again. Now, maybe this is some sort of a 3-wave down followed by a 4-wave up, which means there's a 5-wave down if you're an Elliotician. Really early to tell. Let's give it time to work itself out. But regardless, this is exactly what I've been talking about for weeks now, and that is I'm expecting a drop in the markets. I don't know when, but it's obviously coming, guys. You just got to be patient. However, you want to be prepared when it happens, because I really felt like it was going to be pretty fast and pretty furious, and a lot of these little teeny tiny days we had that went upwards were going to be wiped out in the matter of just a few candles. And we saw a lot of candles get wiped out in the matter of just even today's candle. So let's move on to the daily so we can get a bigger view of kind of what's going on. Look at so if this tick is right, guys, we in effect, let's see, everything that the bulls earned from February was at least tagged today after about, I think I counted these back about 8 days or so. So it took from the beginning of February to the endish of April to get up here, and it took about 8 days after that to get all the way back down. And this is the way the bear moves work when they really get violent. When you see fear come into the markets, investors pull their money. Why? Because they're just better off having it in cash and making sure that everything's safe and honky-dory, and then deciding later, okay, we can always get back in, rather than just wait it out. Big difference between the amateur trader and the professional investment banker institution type thing. They just whatever. Just get your money out. Let's hold on to it, see what happens. So a huge move down, big tick down. We'll see if this gets corrected. Not sure, but I see this tick consistent in all the other indices. And another big run up. Where'd we end up though? Where'd we close? Right at support. Another very, very major support line here that ended up holding by the end of the day, but wow. This was a major move down for the Bears. If you got in with me below 10,950 on the Dow, yeah, not so bad. That trade's pretty good. I would have my stop. You guys, can put it where you want, but I'd probably have my stop up somewhere up above 10,700-ish or something like that. I'd probably have it up above this level, 10,750 or so. Yes, I know that seems like a big stop, but I'm sometimes will take on a little bit more risk based on what I see in the charts. NASDAQ on a 60-minute also falling down 64. You know what? I was watching the charts. This thing was down as much as 100 points in the NASDAQ. I don't know. I'll talk about it when I get to it. But there was a lot of fear that just suddenly appeared in the markets today. Amazing to watch. Rare to see. For those of you traders that are watching this today, consider yourself lucky. This is like one of those rare cosmic events that only comes around. It's bigger than Halley's Comet. It's really, really rare to see. Fun to watch. Even more fun to play, especially if you're short. If any of you guys play options, oh man, were options fun during this time. I did really well on some options during this volatility down in here. They were a blast. Huge spreads on a lot of stuff. We'll talk a little bit about that here in a second with Apple. All right, so the NASDAQ dropping down. It ended up back here around this 1890-ish area. One of my levels of support, pretty close to, at, on, below, whatever you want to call it, but very, very close to it. Breaking all of these moving averages here. Anybody that got in below the 2,000 area, I suggested you're doing very well. I'd say hold on to that trade. Keep your stops in place, but I'm not so sure I'd be scared out of it quite yet. Wait and let these things run. On a weekly, this gives us a great picture of what we saw. Considering if this tick is correct, look at this, down here to the 1740 area into extremely strong lower support down here. Moving averages, support areas, the whole bit. That's where it chose to find its place to stop and roll back up. But, okay, week's not over yet. However, coming into tomorrow, it's got a lot of work to do if it wants to get back up and above this channel line here. Once again, let's go back to a daily and let me show you, even after this candle was over with, look at all these little teeny tiny candles that just grind and grind and grind and grind. And I said, it's coming. I really think it's going to be hard and fast. It's going to be violent. Pow! Right back down again after 8 days of trading. All this work from March gone. Okay? On the weekly standpoint, we're going to see where it closes by tomorrow. Maybe it'll hold that 20-week moving average, but more importantly, we'll be looking to see if it closes below this channel line. That'll be a start for the bears on a bigger basis. Weekly, SPX on a 60-minute all the way down here to this 1065-ish level. I had 1068 as very strong support going way, way, way back, and that's about what it tagged today, running itself right back up again. Take a quick look at the daily. Much easier to track it this way. For those of you that got in with us below the 1175, 1178 area, still doing very well. Yes, I'm in this trade. Hold on to it. Put your stops in. Do not lose money on this trade. Don't be one of those guys. But this wonderful drop looks very nice. Maybe a 1, a 2. This is maybe still part of a 3. Maybe this whole thing was 3. Maybe this is now a 4 to the upside. Real early. I'm not going to get into the whole Elliott wave thing right now, but give you some ideas. Came back to close right at around this 1130-ish area, which is a previous support area from the past. Will we get confirmation tomorrow? I don't know. Big moves like this are usually followed by some sort of consolidation day, unless we're going to start another apocalyptic move like we did back in 2007, 2008. Do you remember when, like, every day you'd wake up to a 30-point gap down, and then it would run down another 30 points during the day, and the S&P would be down 60 points by the end of the day? Crazy moves. So whether we're there yet or not, I don't know. But I know there are a lot of bears out there that are absolutely partying it up right now. So continue to watch the charts and see where we go. Look at where it tagged today. 1065. 1065 is the 50-week moving average. Funny how these things work. Someone once told me that technical analysis is nothing but voodoo, but having a hard time believing that right here. Anyway, popping back up. We'll see if it manages to get itself back up and above the 20-week moving average. However, now this line's been violated. This was the big blue. Look how beautifully this 200-week moving average held up here. It looked like we were going to tag it. I talked about the fact that don't be surprised if they front run it and don't quite make it up to this level. Precisely what we saw at 12.19, and they haven't looked back. Will it make it back up there? Sure, it still could. I mean, it's not devastation yet. Bulls could recover from this. Nothing's truly broken from a bull side on a weekly basis yet. But man, bears are looking good so far. VIX on a daily, gee, I guess it was up. 32%, up 8, even hitting as high as 40 today. This is fear coming into the markets. Here we had, and we talked about it earlier, the daily kind of consolidating, and I said, this is really indecisive. I don't think the markets know precisely where they want to go. We need to pay attention and watch this thing on a spike. Sure enough, we get that spike above 25, and now even above 30. Okay, so weekly close, we'll see where it ends at. But any close back up in this area, obviously fear coming back into the markets here, based on Greece, based on the economic world, economic problems, who knows. But fact of the matter is, don't be surprised if people are asking you, what's next? What's next? Where are we going? Do I take my money on my 401k? That's where you get the VIX. That's where you get the fear coming in. Apple on a 60-minute.